Good afternoon, everybody. Happy Thursday. I am just blindsided that we are walking into August. My kids go back to school next week. So
Hey, yeah,
I
there we
know
go.
if
Yeah.
everybody else on this call, anyone else has kids going back to school next week, I wish you best of luck and I hope the teachers are awesome. So welcome to our monthly AutoLeap webinar. Today I have the honor to welcome Chris Cotton. We do this every month. So if you've been on, thank you for joining again. Chris is back for a wonderful webinar. We really appreciate your partnership, Chris. So before I do that, I'm just going to do some housekeeping notes. This webinar is recorded. So you will get the slides and recordings after. This is intended to be a broader topic that takes probably more than an hour. So if you have any questions, please feel free to reach out to Chris afterwards. You're getting a little bit of a snippet of auto shop profits and cash flows. We do want to make this as interactive as possible. It is Zoom and it is a webinar, so we can't have you on camera or your voice. But please, please, please feel free to chat us in the chat function. Chris and I will be putting those throughout the session live and answer those as we go. So without further ado, Chris Cotton is a shop coach and owner of AutoFix Shops. I did it again, Chris. Auto Shop Coaching. Chris has been in the auto repair industry for almost 30 years and the customer service industry for 40 years. He's a former multi-unit shop owner and has dedicated his life to helping other shop owners turn their shops into high-performing businesses. Obviously, that's just your cool background. Chris, I've gotten to know you as a person as well, and all of that is very true. So I'm super excited to have you today, and we'll give the floor over.
Absolutely. Thanks for having me. I appreciate you putting this together so that we can put it out there into a live webinar and then put it out there in infinity. So long after I'm gone, it'll be somewhere for somebody to see. Hopefully not very soon. But yeah, so we're going to go through, ask questions as we go. What I found is if we wait for questions at the end, everybody's like, I don't have anything. And then they have emails and everything after the fact asking questions, which is great. I don't mind that, but maybe somebody else could have gotten the benefit of asking and answering that questions as we go.
Well, I do have the first one, Chris. David Nix wants to know how you're doing. So
I'm doing great, David. David's a former client of mine from when I was with ATI. He runs a great shop in Texas in the colony there. So, but he's probably in Hawaii watching this. It would be my guess. We'll see. So awesome. That's awesome. Doing great, David. Thank you. So I'm going to get started. We'll go through here and I'm going to be very mindful of everybody's time. I'm going to be done at the top of the hour. So let's get rolling here. People ask me all the time, Chris, like what would your advice to other shop owners be, or what would it be? And I've thought about this for a long, long time. And really, I'm super passionate about this topic, the auto shop profits and cash flow. And if I could have 10 minutes with every shop owner in America and give them one thing, it would be this. It'd be this topic about what we're getting ready to go over here. This would be my one thing to give. And if you don't have a cash flow procedure, I strongly encourage you to make it happen. Okay. So my assumption is that most of you have employee handbooks, clock in and clock out procedures, and probably 20 other procedures in your business. But how many of you have a cash flow procedure and rules that you stick to no matter what regarding your business money? And I think we have a poll question for that.
We do. Oh, is that the... Yep. So do you have a process or procedures for your cash flow? So I'm going to give it a second and then end the poll.
And then while they're going through that, so of course, I learned to run my business from the people I bought the business from and everything else. So my cash flow procedure was to pile all the invoices on the corner of my desk. And my wife, Kimberly, love her to death. She was like, I don't want anything to do with that. You do it. I don't care. I don't want to do this. I don't want this responsibility. So it was almost like a Tetris game, right? So I would look and see how much cash, how much money I had in the bank. And then I would be like, okay, I can pay this invoice and this invoice and this invoice and this invoice. And I would pay those, see how much I left. And then I would shuffle the whole pile and would go back. And then when I ran out of money, I would put all the other invoices on the corner of my desk and they would sit there until a couple of days till I had more cash in. This is a simple and easy procedure. I think it's stupid that I didn't do this when I had my shops. I would almost buy a shop now just so I could do this in the shop. I do this in my business now, my shop coaching business, and absolutely love it. I feel almost stupid at times because I didn't have something like this to help me out and put the guardrails in place. So we ready to move on?
Yep. So did you see, so about 44% said yes and 56 said no.
Awesome. So that's actually pretty good. That was better than I was expecting. So pretty good. So the other thing is I would challenge you that 56% of you seriously think about this. And if you don't do it just like this, let's put some sort of procedure in place to manage your cash flow. I'm going to stop and talk margins really, really quickly. I don't know that we need to talk margins, but I always like to do it real quick just to see where everybody's at. If you talk to 10 different coaching companies and 100 different shop owners, all these numbers are probably going to be different, right? But in my experience, in my 30 plus years, 2 shops, hundreds or almost actually over 20,000 hours of phone coaching, Zoom coaching, in-person coaching at this point, these are my targets. And OB means or better. I would never say, oh, only make 65%. Like if you can do 70% and we're asking for 65, then knock it out the park. Okay. I have several people that exceed these in a lot of different areas. Gross profit margin target, 65% or better. Labor margin target, 71% or better. And when I talk about labor margin, I'm talking about the technician's money cost plus all the benefits costs. So that includes the tax and benefit load. Parts margin target, 55% or better. Sublet margin, 35% or better. Tire margin target, 30% or better. And people always ask me, I can't make 30% on tires. Absolutely you can. But when I talk about that, it's the tire, it's the road hazard. I don't typically include the labor in it, but if you are doing nitrogen and some of those other services, I would include that in that. And then so my goal for every shop in America, every shop that I coach, is to have a net profit margin of at least 25% or better. So if you're doing $2 million a year, you should have $500,000 in the bank at your times when you have it on hand available. And that's what we're going to talk about. And that's what we're doing here. Okay.
I'm going to launch this poll really quick.
Okay, go ahead.
Talking about gross profit margin. So asking what theirs is currently. So give it a second. If you guys could respond, that would be awesome. We love the participation.
So I have no idea makes me sad. And so here's the thing, right? Like, if you have a great income statement, you can find all these numbers, but this is really why you need a great point of sale system, is so that every day when you're in there doing your day to day, you know what your parts margin is, what your labor margin is, and those things. Like you can look on your dashboard through AutoLeap and see that as long as you have it set up correctly. That's a whole different a topic as far as setting up the dashboard, because we do a lot of audits. I help with AutoLeap, do some dashboard audits, and we go in and our labor margin is 100% because we don't have any costs in there. So make sure that once you have a great point of sale system, that you're set up for success and you have those things in there. And maybe we should have thought of this poll. I would really like to know if there's anybody out there that's not using a point of sale system, like if they're using just QuickBooks or paper copy, but I don't know if we can do that.
Let me see if I can. I might be able to, but it might be a good idea just here. Yeah, I can't do it while we're live, but okay. I would love, let us know in the chat function what you are using. We don't care like what it is. If just say I'm using a shop management system, I'm not using one. I think that's as simple as it needs to be.
Right. And that's fine. So the 60 and above, that's good. 19%. Congratulations for you guys. 40 to 50%. That's not bad. To tell on myself, like if you came to my class, usually I spend some time on this. I'm really embarrassed to say it because, I was always great at customer service. I was great at sales, but I never learned from anybody what the margins need to be in the business until after I bought my business and sought help. So I had a shop that was doing about $1.8 million a year in sales when I bought it. And our gross profit, like you guys, I'm going to whisper it. My gross profit in that shop was about 25%. And my net was minus 3%. So because our cash flow was always good, we could always pay bills on time, but we never had any extra until I went in and then fixed it. And so was able to turn that around. But that's, if you ever ask me, if you ever see me in public, be like, hey, Chris, I know what your gross profit was when you had your shop when you started. But luckily for us, we got that turned around really quick. So congratulations for you guys. I would challenge any of you that say you have no idea. That's something that you need to look at least on a weekly basis, if not monthly. And that's your point of sale system can help you out through that. But the big part is going to be through your income statement. So I would challenge you to check out your income statement and look at that and focus on that number. Okay. Was there a question in there, Amber?
No, we've got some people just mentioning what they're using.
Okay.
And I'm going to respond separately. Sky, I'm going to look into why there's not a chat function for attendees. There should be, but feel free just to use the Q&A section as a chat function. And I will, if there's questions, I will raise them. And if not, I'll just respond separately.
So the big thing about having a process in place is it helps you put guardrails and lets you track and measure where your money goes. If I want you to put it in the right place, make sure that it works for you, and make sure that you have the cash you need when you need it. If you talk to an accountant or you look at an income statement or honestly, to equate it to some of the issues we were having, one year we showed a net profit of like $96,000. And just jokingly, I asked my accountant, I'm like, hey, where's all that money at? Because it's not in any of my bank accounts. And I would like to take it out, take it home, roll in it for a little bit, drive it around in a wheelbarrow, and then I'll bring it back to the bank and whatever. He's like, that doesn't have anything to do with me. That's you. And I don't know where your money is. You should know where your money is. But the sad thing about that is I never ran across an accountant that would help me figure that out. Or nobody said, hey, Chris, let's put your money in buckets. Let's do this and make sure that you actually have the cash that your income statement says. So one thing I want to tell you, I see more people get in trouble over sales tax now than anything else. And I want you to remember that sales tax doesn't belong to you. Sales tax is a pass through. And what you're going to do is if you had $30,000 in sales and $2,500 in sales tax, the first thing you're going to do so you don't get in trouble is you're going to take that money out and put that in your sales tax bucket or bank account and make sure that's in there. You're way more you're way more liable to get audited by a local and state government over sales tax than the IRS ever will. The IRS is overworked. They couldn't figure it out, couldn't find you. Those are way, way rare. Most accountants that you talk to will tell you that sales tax and for local and county agencies will get you in trouble way faster. So as that money comes in, one of the first things we're going to do is send the sales tax straight to its final resting place before we process it. And we're going to leave it there. We're not going to use it. We're not going to buy a truck with it. We're not going to do anything else with it. Out of sight, out of mind. And we're going to talk about bank setups in just a second. And that's one of the things that we're going to do is we're going to have a bank account off to the side where we put that money in. So I've done over 100 implementations of this system in auto repair shops. I've also helped some other people in some other industries because it works kind of the same. It's a little bit different. So when I talk about OpEx, that's your operating expenses. Usually when we start and I go through and I do an income statement review, this is the number. So operating expenses are usually 30% or higher. Parts is usually 25% or higher. Payroll is usually 35% or higher. And some people are putting away tax and some people are putting the money for profit, but typically not. If you have a bank account for tax or profit or debt, then I think that's great. but usually after I do the income statement review and look at it, this is where our starting numbers are. 30% for OpEx, 25 for parts, 35 for payroll. And I would also tell you about 18 months ago, our payroll was down in the 30% range, but because of everything going on around the country, that payroll has kind of crept up there. And then tax and profit. And then, so when I say sales tax, I mean sales tax for the business. When I talk about this tax right here, this is a tax account that we're going to set aside to pay your taxes, your tax liability at the end of the year. So what we would do is we would put 5% of all of our sales into this account. At the end of the year, you get with your accountant. He tells you how much you owe. You take that money out of this account, cut the check to the government, and if there's anything left, you get to keep that. You just disperse that as profit to yourself. But we're going to make sure that we have that money set aside to pay for it. I ruined a very great Valentine's Day one year because I went to the accountant, gave them everything. He called me up. I think Valentine's Day was on a Sunday, and I went in on a Friday, and he's like, "Hey, Chris, you owe, I think, $16,000. And I was like, "I don't have $16,000. Like, I do not have the money in the business to write this check." And he's like, "Oh, it's your deal, not mine," which is not good. Not a fan of most accountants, but anyway, there's some good ones out there. And I knew that, but I didn't tell Kimberly. So I didn't want to ruin her Valentine's Day by telling her, "Hey, we owe $16,000 we don't have." But instead, I was probably just a jerk all weekend and ruined her Valentine's Day anyway. So Monday morning, we wake up and Kim's like, "What the hell's wrong with you? What's your problem all weekend?" And I was like, "Well, I didn't want to tell you and ruin your weekend." And she's like, "Fat chance on that. You pretty much ruined it anyway." And then I had to tell her, like, "Hey, we got the $16,000 tax bill that I can't pay." So, I would love for everybody to believe that it's sunshine and roses and I've always been the greatest businessman ever, but that's how we learn, right? Like, sometimes you have to get down in the trenches and move forward. So that first part is the starting allocations, right? Like, that's typically where we start after we do all those things. And then in the end, like a typical great running shop that's gone through the lean process, and we have maximized all of our efforts. Typically, our operating expenses will go down to 20%. Our parts will go down to 20%. Payroll 30%. We're still putting about 5% in tax every time. But now our profit account, we're putting 25%. We're putting 25 cents on every dollar that comes into the business into a bank account for profit. Okay. And these are all percentages of sales. I do want to say that this is not to say that these ending numbers can't be something completely different. Every shop is unique. I would never tell you that there's a cookie cutter system for every shop in America, because there's not, because each shop is independent and businesses don't work that way. Like you really have to figure this for yourself.
Chris, how would you suggest them to start? Like, if their percentages are not right here, right? Where would you suggest, and I apologize if you said this, where would you suggest them start?
Well, so we're going to talk about that here in just a minute. Cool. Unfortunately, I don't think we're going to have a lot of time to get into it, but we are going to talk about it. The first thing you want to do is look at your income statement. This is why it's important that you have an income statement or a way to look at your income and expenses. You're going to have to look at that, sit down and figure out what your actual numbers are in each of these categories or percentages. And then we would start somewhere in that area and then go from there with this bottom line as the target. And that's why I say everybody's different. Like I took those top numbers. If I took all 100 shops that I've done and squeezed them all into one, that would be the average of all of them at the top. But some of them might be, and we'll talk about some reasons why we might be over or short in some of these categories, and hopefully it'll clear up a little bit. Some people's operating expenses are really low and their labor is really high, or they've got issues with their parts cost for several different reasons, and so it could be higher or lower. So one of the things I do is, and I really like doing these, I always print these out and put my headphones on and crank up the music. And I get my colors or my crayon. I don't get crayons out. I call them crayons, but I get my highlighters out, different colors for different categories. And I just start going line by line and being like, this is this category, this is this category, this is this category. If you have a really, really well laid out income statement, it'll all be grouped together and it won't be that difficult. But sometimes for some of you that first time, you're going to have to get those out and go line by line. So the one I'm going to show you is just pretty simple. And it's laid out very well. If you ever get a chance to come to one of my classes, we actually take an income statement from an actual client of mine. And as a class, we go through it line by line together. And then that usually gets a lot of questions. Well, why do you put that there? Why do you put this here? And some things like that. So in a good income statement, we always want to have five shots for income: parts, labor, tires, sublet, and shop supplies. And my ideal income statement is 2 pages or less. If you can get it on 1 page, great. If you have an income statement and it's 5 pages long, we've got way too many categories in there or something like that. We've really got to condense that down. You can get, I would challenge you to get more in depth with your point of sale system, and then let this be the general snapshot and scorecard, just to double check the point of sale system. So for all of those 5 income categories, we're going to have offsetting cost of goods sold categories. So we're going to have parts and parts, labor, tires and tires, sublet, shop supplies. If you're in California, you're not going to have shop supplies because you can't do that there. So the other thing I would tell you is if you have a shop and you do $1 million a year in service and $500,000 a year in tires, definitely want to make sure that you have that extra tire category in there. And then, so if you'll notice on this one, the cost of goods sold under labor, we have all these items that also go into having a technician that we need to make sure that we add that and account for that: technician wages, uniforms, payroll taxes, insurance, meals, training, tools, other, and anything that goes to having that technician. So in that previous slide where we were talking about OPEX, parts, labor, so this cost right here is one of the things that we're trying to find. The labor cost is what we're trying to find as a percentage of total. And then also we're adding the payroll from service advisors, owners, and everything else in there for our bucket. And then everything in yellow here would be considered an operating expense. So you've got accounting, advertising, attorney, bank fees, coaching, computer, dues and subscriptions, interest expense, meals and entertainment, rent, repair, security, travels, utilities. If you don't have a chart of accounts or don't know where to start, you can shoot me an email and say, hey, Chris, can you send me your sample chart of accounts? Or maybe I can go ahead and send that to you, Amber, and whenever you do a follow-up email, we'll just send it to everybody.
Yep, I would love that. I'll put that in that.
And then you can take a look at it. And then it breaks this down even a little bit further. And then again, other coaches may tell you to do this differently. Accountants may tell you to do this differently, but this is what I recommend. And this is what I would try to work you towards, and what I would try to coach you out of for this. So really, when you're trying to find your own allocations, you want to do the income statement review. So you're going to print your income statement out. You're going line by line, and you're slicing up your income statements into the correct categories. And then you have to find your percentages. And that's where we start with. I've always hated the term, I gave 110%. In business, you only have 100%. Like you can, like you can't make $100,000 and then magically come up with 10 extra $1,000 without it being from like a credit card or a loan or something like that. Like you only have 100%. So when you're looking at your cost by percentage, 100% is all you have. Okay. So you have your starting percentages, and then you want to work to reduce those percentages and get those more in line. Okay. The other thing is I have an allocation worksheet tool. And for this one, I'm going to ask that you email me and I'll make you your own and then send it to you instead of just sending out a generic one. I just needed the name of the shop, and everything like that. And then if we have some time at the end, I might click over real quick and see if I can show you that. But basically all we're doing is we're just putting $50,000 in income there, and that auto populates by percentage all the other accounts. That way, when you go in, all you have to do is transfer that money over and move that money over to the correct account.
Chris, I'm going to pause really quick and get a question to you.
Go ahead.
If the service advisor is paid based on sales gross profit, should he or she not be a cost of goods sold?
I've never added them in as a cost of goods sold. I could see where you would do that if that's what you wanted to do. I personally have just never done it that way. Honestly, I don't have a good reason why. That's just not the way I've ever done it, because to me, service advisors, other people like that have always just been a part of the fixed costs. And really, as far as gross profit goes, you're only calculating parts and labor to come up with that. And we're only using things that we can sell, tangible items. So to me, having that service advisor in there.
Well, so let me clarify. He's paid based on sales gross profit. Did you understand that the first time? So I think, yeah. Okay.
Yeah.
Cool.
Yeah. And so the other thing is like my gross profit target's 65%.
Right.
So if you had the service advisor in there, obviously you're going to lower that probably by 10 to 12%. So if you wanted to put your service advisor in there as a cost of goods sold, you could, but then I just need you to understand that you're going to adjust that 65% down to 55% and then have that 55% or better. Hopefully that makes sense.
Yeah. Thomas, if you have any follow-up questions to that, just feel free to.
Yeah. And then, but also I would say if you're going to do that, then you also need to add their uniforms, their payroll taxes, their benefits, all their tax and benefit load as a cost of goods sold as well. So just know that your numbers are going to be different. If you're sitting in a room talking to people, you're going to have to say, hey, my gross profit is 45%, but I have the service advisor and everybody over there. So when we talk about having these buckets, having these areas for our money, people started asking me, it's like, okay, so what if I'm always short an account and I have to add money in or take from somewhere else? What is that showing me? What is that doing? So, there are examples of being short an account, and you either need to change your allocation percent or make a change in your business. Because again, we only have 100%. So if we need 2% more in the payroll, that has to come from somewhere else, or we have to increase sales to make that number bigger. And I always tell everybody, run your business by the numbers and not emotion. And it has to make sense. And so I've got an example of this right here. So if we're talking about our labor pool, and again, this includes everybody, technicians, service advisors, and the shop owner. If that account's short, why might that be? Could have our technicians on the wrong pay plan. We could have our service advisors on the wrong pay plan. It could be a lack of productivity. It could be that we're not billing out time correctly, like we're giving away diagnostic services, canned jobs don't align, things like that. And so one of the things you have to do is realize that this category is short, one, and then two, you have to go into a couple of extra things here and figure out, okay, pay plan's good, productivity's good. Oh, we're giving away, like we're charging an hour for diagnostic time, but it's taking my guys 2-3 hours to actually do the diagnostic work and things like that. So once you figure that out, you have to go a little bit deeper and ask some more questions. And then that last one, giving techs more time than you're collecting, that would be the same thing. Like your technician comes to you and says, hey, I spent 4 hours working on this car trying to diagnose it, and we only charged an hour, and then we gave him the credit for the other 3. Same thing with can jobs. If our can job is set up incorrectly in our point of sale system and we're collecting 0.6 of an hour, but we're giving technicians an hour, that could be reasons why our labor plan is out of whack. I don't have it in here, but something else that you could check is your effective labor rate, some things like that. Parts, why would our parts be short? Not following the parts matrix, not getting credit for cores and returned parts, not returning parts that were unused. I've We've been running into this a lot lately, and I don't understand why. We've got shelves of parts that are brand new that we didn't use, that we either paid for or about to pay for, and we haven't returned them yet. Like I had a shop that they're like, Chris, my labor or my parts margin is way off. And then we got to look and they had $12,000 worth of parts that needed to be returned that hadn't been returned yet. So that could be a huge thing. The other thing is not holding your service advisors accountable to their job and setting expectations. If you have a parts matrix in place, you should be doing repair order audits to make sure that our margins are good. Some of the great things I love about point of sale systems is you can go in, you can build the job. You've got the estimate, you've got the labor, you've got the parts in there, and you can click on a button that says profitability, and it'll tell you what your gross profit on that job is, parts and labor. And so if our shop gross profit target is 65%, you need to make sure that each ticket individually before you sell it is hitting those targets. And if you're not, and then you're not holding your service advisors accountable, then that's your fault. So, and again, this goes back to processes and procedures for that thing, like how to build an estimate, how to make sure we're profitable on estimates. Okay. And that's what we're doing with processes and procedures. All of them is we're just putting guardrails in place. I find a lot of people, they're mad at their employees, and I ask them, what's your employee handbook say? And they're like, oh, I don't have an employee handbook. And I'm like, well, if you don't have an employee handbook, then you don't have a mechanism to hold those people accountable. And at that point, you can't do anything because there's no expectation been set for what they're supposed to be doing. Okay. So Chris, if we're doing these things and we have a lot of it in line and I have an excess, or if I have a windfall in a category, what do we do if we have a windfall in a category? Well, I would say that is your lucky day. You didn't have to hit the $1 billion lottery tomorrow night, that you actually found money in your business and you have extra. So now you get to make a great decision. You can shift that money into debt repayment. You can shift it over to profit. You can give everybody a raise. That's what we've been doing with a lot of our shops lately to keep our employees happy, is giving them like a cost of living increase. I've got a shop owner. He came to a class. He said, Chris, I want an airplane bucket. And I was like, an airplane bucket? He goes, yeah. He said, I want to buy an airplane. And I'm like, okay. So we set him up. We got him going. And then any extra money that he has, it goes into an allocation for his airplane. Now, we haven't talked about an airplane maintenance bucket because I think that bucket would be bigger than the airplane, but you never know. So implementation, we talked about all that. The hardest step in doing any of this is always setting up the bank accounts. The income statement review is easy. The actual allocations are easy. The hardest part is finding a bank that, nice words, Chris. Can you think of any nice words?
I'm recording this.
Okay. Yeah. So I won't say for anybody that's married to a banker or anything else, being a small business owner, just like the rest of you, every time I go to the bank, I cringe because they don't get it. They can't think outside the box. They have so many rules and processes and procedures in place that they can't be flexible. So again, this is the hardest part. So what I found is, and two, when you go in and tell somebody, hey, we're looking at having about 6 accounts in one login and password and 2 or 3 in another, their eyes glaze over and they're like, why would you ever want to do that? But those are our buckets. Those are really, really important. It's the envelope system for Dave Ramsey. I mean, like this is what this is. This is the mechanism. There are several big companies that you can negotiate with. When I first started, Wells Fargo was pretty good. Lately, not so much. Capital One has been pretty good bank for letting us set up accounts like this. Local credit unions are great. And there are some banks that only do online banking that you may not have a relationship that will let you set up these accounts. And remember, we want to set up these accounts and we want no penalty for having a zero balance. We don't need to overdraft. We shouldn't be overdrafting. But again, getting this started is the biggest thing. And I've got a client in Colorado. We have 3 shops. And so his bank still doesn't get it, even though we make money, we keep opening shops and keep doing great. But he's got 9 bank accounts for shop 1, 9 bank accounts for shop 2, 9 bank accounts for shop 3. And then we've got a corporate structure that watches all of that. And then all those banks pay, or all those shops pay in. We've got 9 bank accounts for the corporate structure too. And he can go in and make all of his allocations in less than 30 minutes on a Monday every week. It's the making the allocations is not hard. Again, it's the bank. So some people ask me, Chris, do they all have to be checking accounts? Do I need to write checks on all these? Absolutely not. The only ones you need to write check, like I bet I write 3 checks a year now, probably. I don't even know. Most of your stuff you can do online banking. I would encourage you to get with somebody that does great online banking. You can have savings accounts for the sales tax, the tax hold, and the profit hold. This is where I branch out a little bit because I know a lot of people out there. I mean, I love my Bonvoy points because I've spent about 50 free nights in hotels this year so far. And so I'm okay with you using a credit card that you use for parts and some things if you're collecting points, et cetera. But the second you get that statement, or like I do, I go in and I just pay on it every week. The second you get that statement, I want it paid off with the money that you set aside in the parts account. I don't want you using that card to float anything. Okay. And it's really easy for me. I use FreshBooks, and I have a business credit card, and all of my operating expenses, everything go onto the card. It connects with FreshBooks, and then I just pay.
Yeah. We did have a comment about savings accounts and just being mindful of the limits, the withdrawal limits.
Right.
Yeah. So,
well, the savings account, we're not going to touch those typically. The sales tax account, you'll pay your sales tax once a month, but the tax hold and the profit hold, that's all going to be quarterly or at the end of the year. So typically you're not in those very much. So in this bank one or account one, used to, we taught this 2 separate banks. That way you had to go a separate one. I'm okay having 2 different online accounts. That way you have to log out and log in to get to the other one. Bank one, you're going to do your IRS tax. If you have a debt account, we're going to do debt account, profit, operating expense, parts, and payroll. Again, I will tell you, if you have a specialty shop where you do tires and you do a ton of tires, then we would want to figure out what that tire allocation cost is and then have a bank account for that. If for some reason you sold Tiddlywinks in the back corner and it was $500,000 a year, then I would probably want to track that separately so that we can make sure that we're in control of that account. The other bank over here is we're going to have our sales tax. We're going to have our IRS tax hold, easy for me to say, and then our profit hold. Okay. So this is what it looks like. And so once you figure out what your allocations need to be, once you get the bank set up, then you're off and running. Most of the ones I'm not soliciting, but people hire me, we go through, we set them up. Usually if somebody's really on the ball and they get the bank accounts done, we can do this whole process and have it started in less than a month. Usually if somebody takes 5-6 months, it's because they're dragging on the bank accounts and it's just taking them forever. But my goal, if you're like, hey, Chris, I need you to help me get this up and going, my goal would be to have you in less than a month, have this up and ready, depending on how fast you go. So again, when you're making allocations, sales tax at the end of every week, other allocations after you've moved the sales tax money, and it's all about building a rhythm. You want to get into a process. I have some people that obsess about this and they go in and they make their allocations every day. I've got some shop owners that let it build for a week and then do it all on Monday. So again, if you have the process and you're working the process, I'm fine with it. I don't ever want to give you anything so rigid that you hate the rules and you don't want to do it. So again, your business is unique. Let's make it unique to you. We can format this to you and go. And then once you get in the rhythm, keep it up. We're going to make adjustments quarterly and small increments. So if we notice that we had a windfall in our parts account and we are like 3% over, and that lasted or averaged a quarter, then at the end of that quarter, we can take our extra money and shift it over to profit or somewhere else if we needed to. And then we're going to make sure that we make an adjustment on that. So what we would do is we would reduce our parts by 3%. And then you can add that to wherever you want to. If you want to do 1% here, 1% there, 1% there, you can. If you want to put all 3 of that percent in debt repayment or profit, then you can. But we're going to do that quarterly. We're not going to do that like every week, every other week, things like that. Because I want you to think about a refinery. Most people probably don't know, but if you have a refinery, especially like right now, you have your processes all locked in, and with the heat and everything else, as long as a thunderstorm doesn't come through, you might not make an adjustment for 3 months because the weather's perfect, everything's rocking along. But if you've got somebody on the control panel that likes to get in there and mess with things, once you make an adjustment, then it sends the whole refinery out of whack until you get it back in line. So again, we don't want to be cranking the dials all the time. We want to set it, let it sit, and kind of let it rock along. Again, we're going to do it small increments, and this is going to be a 4, 8, or 12 quarter plan. And that's right. That's a 1, 2, or 3 year plan for some shops. Some shops will have it dialed in quicker. Sometimes it's going to take a little bit longer. Okay. How are we doing on time, Amber? I don't have my watch on.
I was just looking at that. We've got about 20 minutes.
Okay.
So we're good.
I think we're good. Okay.
Whizzing through.
So, okay. Let me move this to the top. Boop. So if we have a flow chart that shows all these allocations and what this looks like from top to bottom, front to finish, I'm going to point this out to you and then I'm going to come back. So we've got things that we do weekly, things that we do quarterly, things that we do yearly. And then here in a minute, we're going to talk about how we pay our bills monthly. And we got the 10th and 25th. So the way this comes through, we have our invoice and we have our income account. This is where all the money comes in. And that's one thing that I didn't list. I need to correct that slide. You're going to have a bank account for income. This is where all your money comes in, and we're not going to have any money that anybody takes out of there on an automatic payment, an ACH, a draft, or anything. It's just an income. It's just an income bucket. Okay. So at the end of that week, we're going to take out the sales tax, and then we're going to make our allocations. So our allocations are payroll 30%, parts 23%, operating expense 40%, profit 2%, debt 2%, tax 3%. Okay. Here's where people lose me, or where I lose people just a little bit. When we get to the quarterly mark, we're going to take the money that's in our tax and we're going to disperse that into a tax hold. Okay. And again, we're switching from this bank out. That way we don't see it, because I don't want you to be tempted by it, right? It's like having a 12-inch plate and having steak and potatoes and everything, and you got everything over there. I don't want you to be tempted by that. I want you to have a small plate and not eat so much. So at the end of the quarter, we're going to move that over to our other bank, our holding bank. And at the end of the quarter, you're going to take half of what you have in your profits and do that as a draw or disbursement or whatever your accountant wants to call it, and write yourself a check. But then we're going to keep the other half of that profit, and then we're going to keep that tax money in those accounts until the end of the year. So at the end of the year, we've got our final tax bill. We go to the accountant says, hey, everything's great. You owe $10,000. You cut a check for $10,000. If you've got $30,000 left in there, you get to do a draw or draft or whatever to you. And the rest of the money that's in the profit account at that point, you're going to do the same thing with that. Pay it to yourself. Unless for some reason you don't want to pay yourself that money. But I would say, reduce debt with it. If you're at the end of the year, here's the thing with the accountants. They come up at the end of the year and they're like, hey, Chris, you need to buy a new truck. Oh my gosh. Okay. So how do I pay for that truck? Then you look at your profit account and of course, you couldn't buy a new truck now for $50,000, but say if you could, you got $50,000 in the profit, and the banker's like, hey, go. Then you just boom, cut the check and go, and there's your new truck. No payments, nothing else like that. You're good to go. There's 100 different ways to skin this cat. Down here, before we move forward, we're going to have a process for paying our bills. Like, I paid my bills as money came in and did the Tetris and the puzzle game. I want you to set it up so you tell your vendors, I pay on the 10th or on the 25th. Or if you want to do it on the 7th and the 14th, I don't care how you do it. Pick 2 days. But I know a lot of you have vendors, if you have any accounts receivable, that they may ride you 45, 60 days. I want you to have a program for paying your bills and let your vendors know, hey, you have to have me this statement by this date to get it paid by this date. Some people make it so also their payroll comes out on the 10th and the 25th or whatever, or some people make it so their payroll comes out in the in-between weeks. But the big thing is that what we're trying to do is make sure that we always have money in the accounts so that we can always pay our bills. We don't have to worry about being overdrawn, or the very worst thing that can happen is as a shop owner, I've known some shop owners like this. I don't want you to look down and open your desk drawer and have 12 unpaid or uncashed checks to yourself in your drawer because you didn't have the money set aside for that. If that's the case, you have a fundamental issue in your business and you need to fix it. No business owner should be having a hobby. Like if you have unpaid, oh, it gives me heart palpitations. If you have unpaid or uncashed checks as a shop owner in your desk drawer, or if you're just not even bothered to write them, my heart hurts for you, and I hope you fix that quickly. Okay. Again, have a process when you pay your bills. And so one of the things that I do that also creates some issues when we're doing this is I want you to set up your income account, and I want you to close your current account that you're using for everything. Unless you can tell me a better way to do it and another way to use it for. Because what I want you to do is I want you to have that account zero, kill it, dead, done. And as all those auto drafts come in, as all the ACHs come in, when Centos hits your account for whatever every month, anybody that you're paying automatically, I want them to have to pick up the phone and call you and say, Chris, your auto pay didn't go through this month. Why not? I need you to pay this bill. And then when that happens, I need you to make the decision. Do I really, really need this service, or do I want this service? And if you don't need it, get rid of it. That's the best opportunity to get rid of it. Tell those people to kick rocks and stop being leeches on your business and sucking money out. If you don't need it, don't keep paying for it. I don't know. We do audits all the time, and there's, without fail, I could probably go into every shop in America and find $500 to $1,000 a month, depending on the size of the shop, of stuff that just leaks out or got by us. And then we've been so busy, or let's call it what it is, too lazy to get rid of that. Like how many of you would like to have another $500 to $1,000 a month in your business to do whatever you want to it, cash those checks that are in the drawer, right? So make those vendors call you, and then make the determination of whether you keep that service or not. Okay. Make your vendors work within your process. Those people work for you. Make sure they understand that, and make sure you hold them accountable. So we talked about this a minute ago, the quarterly movement of money. Again, profit hold, you're going to take half of the profit and pay yourself, and the other half goes to profit hold. Tax hold, at the end of each quarter, you're going to take your tax and move it to the tax hold. That's for company taxes. After your taxes are paid for the year, you can keep the rest. Some people, I'm surprised nobody's asked this question yet. Some people are like, okay, Chris, how much should a shop owner be paying themselves? Depends on what you're doing. If you're writing service full time, then by law, you're required to pay yourself what it would cost to replace yourself. If you're an owner working on the business, and not in the business, I've got shop owners that pay anywhere from 60 to 90,000 a year, pay themselves that. And then the profit, the disbursements, all that's extra. Okay. So again, there's no great answer for every shop in the United States, but I've had some shop owners that pay themselves like $150,000 a year. I think that might be a little bit much. I would set it up differently. Do less through payroll and wages, and then the rest through draws and disbursements and things like that. Oh my gosh, I don't even know, but we're doing pretty good.
Done.
I think we had one more. I think scooted past you there. I think we had, is this slide 22?
Yeah, so we have a poll. So, and then I did just see we had a comment come in. So Brooklyn, I'm going to answer that separately. I think that we can handle that offline and help you and get Chris to help you.
Yeah.
So let me run this poll really quick. And it's basically just, if you don't have processes in place, are you ready to put that forward? Please respond, and then we'll go to that next slide and I'll kind of go into that. But Chris, I really appreciate it. If you guys have any more questions, please go ahead and put them in. We would love to answer them.
Yeah. And I've got, if we can, I'm going to go ahead and.
You want to show that other slide?
I'm going to show this other slide.
Yeah.
And then I'll let you talk about it.
Yeah. So I'm just going to, mostly everybody said yes, they're ready to go. Some said no. So what Chris is showing you, AutoLeap has a summer promo going on right now. So if you sign up with an annual contract, you'll get 50% off 3 months. So everything that we talked about here, to help you streamline these processes, help you get the KPIs that you need, your profit margins, all of that, shop management systems can help you do that. So when you're going to do an income statement and all of that, you have the data points that you need. Of course, if you do sign up, you'll be entered to win a trip to Florida, expenses paid. So I'm going to send the link in the chat function if you are interested. And Chris, I will let you take back so you can share.
So the big thing I would say is we went through this rather quickly. It seems way more complicated than it really, really is. I swear it's really easier. Once you get the bank part of it done, the rest of it goes really, really quickly. I hope the ones that said no already have another one in process or something like that. And then my only question would be is like, if you answered no and you don't have it, I hope it didn't feel overcomplicated enough that you wouldn't want to do this. And then some people may have their cash flow straightened out and they don't need it. So that's fine. I'm going to go to the last slide, but I don't want everybody to leave just yet, because I'm going to flip over to the allocation worksheet just to show that to you, because I think we've got a little bit of time. Here's my information if you want it. Chris Cotton, 580-491-3519. That's my cell phone number. Chris at AutoFixSOS.com. You can email me. Website, AutoShopCoaching.com. I have a great podcast. I think it's a great podcast sponsored by AutoLeap. It's the Weekly Blitz with Chris Cotton. You can find that on Apple, Spotify, everywhere. You can also go to my website and get it. Also, all those episodes are on my YouTube channel. And if you go through the website and do it or the YouTube channel, you can just click on it in the background and then just play it and then just listen to it. Let me find the best way to get out of here.
Yep. And I'm just last housekeeping, I'm going to just re-mention it. So this is recorded. You will get a recording of this. Of course, reach out to Chris if you have any questions. We also will have a survey after this. It will pop up at the end. We do everything, all these webinars based on your feedback that you give us, on speakers that you request, on topics that you request. So please do that and fill that out. You'll get a $20 digital Amazon gift card. And then the last thing, we have another webinar coming up on the technician shortage. So relevant, timely topic. So August 11th. And then looks like you got it up.
Okay. So this is the demo allocation worksheet. You can do it in Excel. You can do it. This is in Google Sheets. I do everything in Google, so I can share it rather easily. And basically I just have my categories here to the left. I have the percentages in. Say we did, after I took my sales tax out, say we did $32,857 in my income account. I just pop that number in and boom, this tells me exactly what goes where. I go in, I make those, and then we're done. Like easy peasy lemon squeezy. So, and again, so if somebody wants this, if anybody wants it, email me, give me the shop name, and then I'll go in here and make one that has your shop name on it and send it to you. But then you're going to have to figure out your allocations and adjust that. So that's all I have. Are there any other questions? Anything else? And again, I want to say this one last time. It's not that complicated. I swear it's easy. I wish I'd had this when I had my shop. But I didn't. I was too dumb to figure it out. But thank goodness I can go out and share and help everybody else with it.
Well, now you're here to help.
Right.
That's the best way to learn from your mistakes. So again, guys, we appreciate your participation. Chris's email was given. So if you need it, please reach out to us. Amber, you have my email, Amber@AutoLeap, and I will loop you in with Chris so that you guys can move forward with that. And then the recording will be sent out after, most likely tomorrow. And then the survey. So make sure you take that survey. And Chris, as always, thank you for your time. I really appreciate it and your expertise. And we'll see you next month.
All right. You're very welcome. Thank you.
Bye, Chris. Bye, guys.